You're watching Resource Intelligence, and we're live at the PDAC. I'm sitting with James West, the founder of the Midas letter. James, thanks for being with me.
Good to be here, Doug.
So, Jim, you got the Midas letter. What is the Midas letter? What does it do?
Well, essentially, I select 5 stocks on the first Sunday of every month that I expect to double or better 9 times out of 10 within 12 to 18 months. And these stocks are exclusively resource stocks on the TSX and TSX Venture in Canada.
So this is a service that you provide for visitors to your site, subscribers?
My paid subscribers are individual investors, high net worth investors, and institutional investors. And my free list is open to anyone to try, and they'll get to see a sample of the letter that's about 3 months old, so they can see what they missed out on.
Right, so you got to pay to see the new news, and you're essentially guaranteeing your success rate at choosing stocks.
Well, I can't guarantee, and nobody can guarantee, and if anybody tells you they're guaranteeing it, they're already lying to you. So, no, I don't guarantee it, but that's why I say 9 times out of 10. In the last 24 months, we've selected in total just over 80 stocks. Out of those 80 stocks, over 50% are already doubled in less than a year. The rest of them are either sort of ratcheting up more slowly, or they've gone even beyond that. In fact, we've had 3 1,000% winners this year.
Fantastic. We're at the PDAC. I saw you had a talk the other day and had your crystal ball with you. Is that the way you divine these picks, or how do you go about doing it?
Well, the crystal ball is an interesting technology. In the hands of the uninitiated, it's completely useless, but in the hands of an expert, it's spectacular. No, I was using the crystal ball in my presentation to make a point about the importance of quality information. And the point I was trying to make, and was using the crystal ball as a metaphor for, was that a lot of the investment advisors and a lot of the analysts and a lot of the media who interpret the events that sort of determine values in resource companies, they make broad sweeping generalizations and claims that can't be verified and aren't really that relevant in the case of making money. For example, I tell my subscribers that I don't care about geology, in that if a company is going to go out and explore a property and try to find minerals, I'm not so much interested in what the geology turns up outside of what it's going to do for the stock. Again, the value proposition I'm offering is the stock's going to double or better within 12 to 18 months. So whether it's geology based, or based on the fact that some high profile investor joins the board, or based on the fact that they acquire something in a country that's prolific for a certain commodity, like Colombia is very hot now, to me that's more important than geology in the finite window.
So it's not just geology being an important element, but you're saying a change in management or a jurisdictional issue could have just as much effect on a stock price.
Well, I'm trying to downplay the significance of geology when it comes to making or seeing a stock go double or better.
Right.
I mean, to say geology doesn't matter is completely outlandish, and that's utterly ridiculous. Geology is the key. Geology is what attracts everybody to the thing to begin with. But in the window where a stock doubles or better, it's not necessarily the geology that's going to be a driving factor. In fact, there's been cases where, I can point to half a dozen companies where the geology looks great, but the stock's going nowhere.
Right.
I can point to companies where the geology is completely unknown, but the stock has done 300%.
Okay.
Why? Because of the people behind the company, because of the location, because of their track record. So, of course, geology matters.
Right.
But when it comes to identifying these companies, geology is not one of the key metrics that I use to determine a company is a pick or not.
Gotcha. We're at the PDAC. It's been a massive event. 25,000 plus is what they're reporting so far. Are there any signals that this market is overbought to you?
Well, when you see the increase in visitors go from 22,000 last year to over 30,000 this year, whatever that final number is going to be at the end of the day, that certainly demonstrates that there's a lot more interest in the market. But is this market over? Absolutely not. I mean, we've reached the point in our evolution as a species where all of the big deposits are known. We know where all the economic stuff is in the large scale close to the surface. So right now what we've got going on is a global competition for these large resource assets.
Farther flung, harder to find.
Exactly, more expensive to extract. For example, shale gas. Without a minimum price of $60 per barrel oil, shale gas is just not viable. And prior to early 2000, we really didn't have the technology to exploit shale gas deposits. I mean, I remember as early as recent as 2004, the Barnett shales were identified as oil-bearing shales, but the discussion revolved around the idea that there's no way to get at these things. They're too deep. It's rock that's non-porous. So they've come up with this hydraulic fracking technology that fractures the rock and makes it porous so that you can collect oil from the wellhead, which that technology didn't exist.
Another hot topic for you, gold. I think you're a gold bug, you could say, to some extent, or...
People say I'm a gold bug, but if gold was not an appreciating asset, I would unceremoniously abandon it.
You'd be a tungsten bug, or
well, exactly. Right now, I'm best described as a commodities bug. I believe that given the nature of the inflated supply of money in the world that is flowing into asset classes like financials, insurance, technology, versus commodities, where everything that is either bought or everything that is bought is either grown or mined. In other words, these are tangible things with value that is used, whereas the other asset classes are more, the value proposition is more based on what is somebody willing to pay. Similar for commodities, but commodities, people need to eat, people need to drive, people need to heat their homes, people need clothes, so you can't live without these things. You could live without commodities, although most people will say they can't live without their BlackBerry or their iPhone.
Sure. Well, they're really infrastructure things as well, right?
Exactly.
I mean, our society is built on technology now, so I really do see what you're saying there.
Yep.
Jim, why don't we talk about a company that you find interesting these days?
Okay, well, a company I've been following actually for years and which has really started to make some serious headway is Tinka Resources, TNK on the TSX Venture. Now, this company has been exploring a project in Peru. It's called the Colquipulcro.
Okay.
Colquipulcro, and it's in a region of Peru that is prolific for copper, gold, and other base metals mines. The Colquipulcro project is the first significant silver dominant resource play in that entire region of Peru. And the mines that are proximal to this thing are Cerro de Pasco, which is one of the most famous mines in Peru, Antamina, one of the most prolific mines in Peru, and the Uchuchugua, which is also a very famous mine. And so what's happening now with Tinka is they've already got 30 million ounces. They know they've got 30 million ounces in one area, in a very mining-friendly place with a very low strip ratio. But they've just discovered is that they've got a region that's 1.5 kilometers to the north that has the same geological setting but is 3 times the size of the existing 30 million ounce deposit. So this April they're going to start to drill this new zone, and they're also going to start to drill the extensions of the known zone. And so the potential for this company at this time is really substantial.
Looking at their stock here, I see a lot of interest, growth, tons of volume lately. Is that an indication of interest in the upcoming drill program?
Absolutely. In fact, I was speaking with the president of the company, Andrew Carter, at his booth here, and at the same time I was there, the CEO of one of the world's biggest silver-producing companies was talking to him and was clearly interested in what Andrew had to say. And I think a lot of the volume you're seeing in the stock over the last few days is indicative of the fact that, hey, this company's finally getting traction with both the retail market but also with the institutional side. Okay. And so, at this point in my book, Tinka is a real buy, because we know they got 30 million ounces. I mean, do the math: 30 million ounces times $30 a share. I mean, we're close on $1 billion of contained metal value. That's just from what's known. I mean, we've got so much upside in this company. It's something that this is a company where I can say in confidence to my shareholders that this is a company that the share price is likely to double or better in 12 to 18 months.
Good. Okay.
Or I'll give you your money back. And that's really something that I do is I give them back their money.
Good. Okay. Thanks for joining me, James.
Thanks for having me, Doug.
James West is the founder of Midas Letter. You can find them at midasletter.com.